Hello ladies and gentlemen, this is boy Sam from Armada Trading here, and today we're going to be looking at Sens Holdings. I haven't done a video like this in a while. I think the last person who did this was Josh on this channel, but I thought that I would cover a bit of SENS so you all can get a better understanding of what I think of SENS and where I think it's going to go in the not so distant future. In today's video, we're going to be doing a graphical analysis, financial analysis. We're also going to be doing a financial breakdown, and we're also going to be looking at the recent news and obviously their new upcoming earnings report. So if you're excited for this video and you want to support me, then feel free to hit a like on this video and subscribe if you're new. It really helps the channel out, and I can't thank you enough for giving us a voice on this platform. With that being said, let's get on with the video. Before we make today's video, I just want to say that I'm in no way, shape or form a financial advisor, and please take anything I say with a pinch of salt. I'm simply a university student studying business and management, and that is all. Stocks are battlefields, only put in money which you can afford to lose. I can only scout the battlefield for you, however I can't fight the battle for you. So with that being said, let's get on with it. So, as we always do on this channel, I'm going to give you a quick company profile. I'll tell you a bit about the company, and then we'll go into the shareholder statistics before we move into the financial composition. So, Sens Holdings, a medical technology company, develops and commercializes continuous glucose monitoring systems for people with diabetes, primarily in Europe. Its products include Eversense and Eversense XL, which are implantable CGM systems to measure glucose levels in people with diabetes for a period of up to 90 and 180 days. Sens Holdings Incorporated was founded in 1996 and it's headquartered in Germantown, Maryland. So that's a quick company overview, and we'll now get into the shareholder statistics. Now, within Sens Holdings, it has a massive amount of corporate bodies within the shareholding structure. So 18.46% of Sensonics is made out of private corporations, 8.09% is made out of traditional investment, 7.61% is out of public corporations, 5.97% is out of individual/investors, that would be people within the company, like sort of part of the partnership scheme program sort of thing, 5.91% in VC/PE firms, 2.39% in hedge funding, and 0.26% in bank and investment, and the rest of it is pretty irrelevant. So what we own in this company, we own 51.11% of Sens Holdings, which is quite low compared to a lot of other companies. However, what I would say about having a lot of these big corporate bodies within an organization and within a shareholding structure is that their sole purpose is to make money. They would not be investing in Sensonic Holdings if they were going to lose money. They have seen an opportunity within Sensonics, and what they have done is they have invested in it to make money in the future. So in my opinion, what they have done is they've invested in this as more of a long-term play, and I'm going to get into why very shortly. So to really get to know a company, you always have to know where their revenue is coming from and where their main source of income comes from. So 100% of Sensonic's sort of revenue comes from glucose monitoring systems. That is a full 100%. And the region states, the United States, has 15.24% of their income, and outside of the United States has 84.76%. And within the corporation profile that we just said, they sell a lot to Europe, so I imagine that a lot of this outside of the US would be European income coming in. So I always find Sensonics a very weird company to talk about in terms of financial position. So as you can see, within their Q4 in 2019, it was at a very high place. Then it had a massive impact from COVID. COVID really knocked this company down. However, it has shown signs of it getting back within the cash flow side of things, right? So it has increased by about $5 million from its Q3 to its Q2 in 2020, and $3 million from its Q2 to Q1. So it has shown growth between each stage, but obviously COVID has had a massive effect on this company. And real quick as well, I wanted to touch upon about their assets and their ability to pay back debt, because it's actually not very good. However, I'm not too worried about this at the moment, just because I know how much COVID has probably affected this company. So in terms of their current ratio, which is their ability to pay back debt, it has consistently improved since their Q4 of 2019. And for anyone who doesn't know, that was pretty much in between where COVID started hitting. So they are starting to adapt to the whole COVID structure. And we're very interested to see what the earnings reports say, which is coming out very soon, which we'll touch upon later. But their Q4 in 2019 is up by about 0.6% for their Q1. And then it's about a 0.9% increase from their Q1 to Q2. And then it is about a 0.9% increase again from their Q2 to Q3. So they've shown sustainable growth within their current ratio, which, if you don't know, is their ability to pay back debt. It's their current assets over their current liabilities. So that is what that is. But one thing I did want to touch upon, which doesn't put me in good, it doesn't give me a lot of hope about this company. And I'm just going to quickly touch upon this, because their actual assets to liabilities ratio has gone up, which is actually a bad thing because they have more liabilities than what they do assets. However, they have probably had to take out a lot of loans over the COVID period. And I just wanted to make this clear that not everything about this company right now is sunshine and rainbows. There are some negatives that have come into play within this company. However, they have managed to stay above ground during COVID. And that is a very important thing to bear in mind, because if you look at what they were doing before COVID happened, they were actually doing very well and they were in a very good position as a company. So now might not be a bad time to invest, because if you think about it, they have shown signs of growth in 2019, and COVID just knocked them down a peg, and I can genuinely see them bouncing back once COVID starts stabilizing and people start getting more treatment, more glucose systems. Like people with diabetes, they've probably been sheltering inside. So as soon as this whole COVID thing goes away, I can see a lot of these monitoring systems coming back into play. Now, this stock has been it hasn't been a volatile stock. We have seen quite bearish trends and we have seen quite bullish trends. Now, recently, it's sort of been quite bearish in the sense that if you look at this graph here, we did see sort of a wedge take place over here. And pretty much we saw it break out of this wedge, it went up a bit, and now it's sort of stabilized. Now, it's created a nice little support structure here. Now, what I like about this is we love support structures because it shows that once it breaks out of this support structure, it can create a new level of support higher. And that is probably the lowest it's going to go for a fair while. Now, what I want to say with Sensonics is that I think as time goes on, this company's only going to get better. The fact that it's managed to stay above water in its toughest times yet, I think that shows a lot of like, what's the word? A lot of encouragement to us retail investors that this company can actually be a player within the industry. And you have to remember as well, if they manage to crack some deals within the US, because a lot of their revenue right now is coming from Europe, and that would have had a direct impact from COVID, because as you all know, it's been really difficult to travel between countries. And the fact that they are based in Maryland, Germantown, which I assume is in the US, Maryland is in the US, so they had to come across and try and get their products to Europe, which is their main target market. So, like, I have to present to you the facts about this company. And the facts are that this has taken a hit over COVID. And I've seen a lot of other like YouTubers and a lot of other news sources say that this company is not a good buy. However, I'm going to say the opposite, because I think that this company could be a good long-term investment, not short-term. Like, don't get it twisted. This company short-term, I don't think it's going to do amazingly well. And I may get hate in the comments for that, but I'm just stating my opinion and all the facts that have shown towards me. However, what I would say is that as a long-term investment, I could genuinely see this company reaching $10 within the next year. All COVID dependent. If we could have some transportation between countries, so if they can get their products to Europe very easily, then I can see Sensonics going up very quickly. And that is all just my opinion. And I'm going to quickly get onto the news section of this video before we end it off. You know what, everyone? I have no problem when I say that I'm wrong, because Sensonics has just been awarded a US patent of 10,932,703 integrated optical filter systems with low sensitivity to high angle of incidence light for an analytic sensor. That is absolutely huge news, and this could really act as a catalyst to help Sensonics out Sensonic stocks out short term. So when I said before in my video about how I can't see it being a short term investment, now that I've seen this news, and this literally came out 10 minutes after I recorded all of the stuff that you saw within the video, and I thought I had to add this in because you all deserve to have a full understanding of where Sensonics could be. And this is huge news. This could be a catalyst for something even bigger within the future. And I thought I'd just add this in because now Sensonics could be a very big player as a short-term investment. And I will be making an updated video once the earnings report comes out around the 4th or 5th of March. So you all can get an even better understanding, and I'll talk about this opinion even more, but I thought I'd add this into the video because it's a very important factor as to why Sensonics could be a very, very good buy in the future. Now, this is a news article directly from the Sensonics website, and I will put a link to their website down in the description down below. However, on the 15th of February, they have stated that they are going to be releasing their full year earnings of 2020 and their fourth quarter in March, on March the 4th, which is very good news because we are then going to be able to see whereabouts this company is and whether it has shown that consistent growth which we saw in the previous section of the financial composition. If it shows that sustainable growth and it shows they could stay above water within these tough times, then I think that Sensonics is a buy, personally. And because they have shown signs within 2019 of it being very good, I can genuinely see why it can go up. And I'm going to quickly read this out to you so you all can make your own judgments. And obviously, I'm not a financial advisor, so, be sure to do your own research before entering into this company. So, Sensoric Holdings, a medical technology company focused on the development and commercialization of long-term implantable continuous glucose monitoring systems for people with diabetes, today announced that it plans to release its fourth quarter and full year 2020 financial results after market close on Thursday, March 4th, 2021. Management will hold a conference call to review the company's fourth quarter and full starting. Okay, so pretty much there's no point reading this because it's basically reiterating what the title says, but Sensonics will be releasing their full quarter earnings in the 4th of March 2021, and this is very important because this could actually raise the company's price short term. If they are actually going to be getting more money, which I'm not sure it will happen, but I can see them having that consistent growth again. And if that does happen, it's consequently going to raise the price of Sensonic Holdings, and it could potentially be a good buy. Now, with that being said, it could also go the other way, and the company may have lost a lot of money. You just don't know. It's the stock market. Things happen. But I just wanted to make it clear that, in my opinion, Sensonic Holdings is a buy. It's a long-term hold buy. It's not going to be a short-term. It's not going to be a swing trade. But as a long-term investment, I think it could be a very good play. With that being said, I hope you have all enjoyed this video. If you have, please remember to hit that like button and subscribe for new. It really helps the channel out, and I can't thank you all enough for the recent support on this channel. That's going to be it for today. I hope you've all enjoyed this video. This has been Sam from Milo Train. I'll see you in the next video on the channel. Take care, everyone.